welcome to my channel. In today's video we're going to cover what forex trading is for beginners in 2023, so let's get started. Please pause this video guys and go through this disclaimer. Please pause it for 2 minutes, read it, make sure you understand everything. Once done, please come back to the video. I'm hoping that you guys have read the disclaimer by now, so let's get started. Our first thing first, what is forex trading? Forex trading is also known as the currency exchange market or the forex exchange market. What that means is we buy and sell currencies in the foreign exchange market. Also guys, this is the most liquid and the most it's the most traded market in the world, with almost 6 trillion traded every day. Now guys, let me give you an example. Why do we need forex? So let's just say we're in the UK and we're going to America. Now we're gonna have to exchange our British pounds with US dollars in order to spend that money in America, because we will need those dollars in America to spend on whatever, food, restaurants, wherever you're going guys. So that's how forex works. Whichever country you go to, you will have to exchange your currency. For example, if you're traveling from the UK to their currency in order to spend the money abroad. So that's what forex market is guys. It's done every day. Whoever travels, wherever they're going, they need to exchange the currency before or when they get there in order to spend it on their holiday. Now guys, the next slide is who trades forex and why. The primary participants in forex market are banks, corporations, governments and individual traders. What that means is banks, for example, like JP Morgan, HSBC and Lloyds, for instance, they trade the forex market, but they trade it in a bigger volume, much bigger volume than the average individual traders like me and you. So they're known as the market makers, because they create the most liquidity in the forex market. Also governments trade it as well, some corporations trade it as well, and individual traders are of course like normal retail traders as they call them. Now traders predict where the market is going next. So for example, where they do this by various things such as the technical analysis or the fundamental analysis. So technical analysis are when there's different parts to technical analysis. For instance, you see a chart pattern, or you see a candlestick, or you're seeing something that's going on in the forex market, and now you think that from this point the price is going up or down depending on which direction you're looking to trade. Fundamental is more like news. So for instance, let's just say if like COVID-19 for instance, that was a major news that caused fluctuations in the forex exchange market. So some stocks went really down, the currencies were affected. For example, Brexit, it had a major impact on UK, because when UK were getting out Brexit, it caused the pound massively, it had a massive impact on the pound itself. So that's another thing that really affects the forex market. Now guys, when we trade forex, there's different pairs. Major pairs are, there's 7 major pairs, and they're the most traded pairs and the most liquid pairs. For instance, we have the euro US dollars, which is, it's the euro against the US dollar, and this pair represents the currency of Europe against America, which is the US dollar. Now this is the most liquid and the most traded pair in the world. The next pair we have is USD JPY, that's US dollar against the Japanese yen. Then we have the GBP USD, which is the British pound against the US dollar. Again, there's a nickname for this pair, is cable, as they call it, and again this is a very popular pair. A lot of traders like to trade the cable because it's not as volatile or as aggressive compared to other pairs. For instance, when we have the USD JPY or something else, or GBP JPY. Next on the line we have is USD CHF, which is the US dollar against the Swiss franc. Then we have AUD USD, which is the Australian dollar and the US dollar. Moving on to USD CAD, which is the US dollar against the Canadian dollar. This pair, they call it, is also known as loonie. And as you know guys, Canada is one of the largest exporters of oil. So this is a very, very famous pair and very popular pair indeed for retail traders as well as corporations and banks to trade. The last pair we have is the New Zealand dollar against the US dollar. Some people like to call it the Kiwi. This pair again it affects the commodity prices and everything else that goes along. One thing you'll realize is guys that all these major pairs, so each of these 7 pairs have US dollar on one side. So whether that's the base currency, which is the first thing, and whether that's the core currency, which is obviously it comes after that. So base is what's first and core is what's after that. So that's one thing we really need to remember guys when we're trading. So for instance, if we are trading Euro USD dollar and we put a buy position on, we are predicting or anticipating that Euro will get stronger against the US dollar, and vice versa guys. If we are putting a sell position on, then we are anticipating that the Euro will get weaker against the US dollar. Now, what to trade in Forex? That's the minor pair guys. So minor pairs they don't have US dollar, so they're more like Euro GBP, which is the Euro and British Pound, Euro CHF, which is the Euro and Swiss franc, Euro JPY, which is the Euro and Japanese yen, GBP JPY, that's the British Pound against the Japanese yen. We also have GBP CHF, which is the Great British Pound against Swiss franc, Euro AUD, which is Euro against Australian dollar, and then we have a Euro CAD, which is the Euro against Canadian dollar, and then we have a AUD JPY, which is the Australian dollar against the Japanese yen. Now these pairs guys, they are the minor pairs. The reason they're minors is because the major ones, like I said, they all have USD. They are either traded against or with USD. So that's one thing that we really need to remember guys. With these pairs, they're the minor pairs. So the spreads might be much higher on the minor pairs because they're traded less. So the cost for you to enter the market for these particular pairs will be more as compared to the cost for you to enter the market with major pairs, like we went through in the previous slide, because they are traded more, hence why you will get a cheaper cost, i.e. the spread, to enter the market. Yeah, and then moving on guys, we've got the AUD NZD, which is the Australian dollar against the New Zealand dollar. And at last we have the CAD JPY, which is a Canadian dollar against the Japanese yen. Now we're going in this slide guys, we're going to go over the positions we take in Forex trading. So there's 2 types of positions, or 2 types of orders as you call it guys. One is going long or buying, and the other position we have is going short, which is selling. So when we're going long on a pair, we anticipate for that to go up. So long equals bullish, like a bull that jumps up, and the short is like a bear that jumps down. So you can see, you can just anticipate an attacking version of a bull. So when a bull attacks someone, they'll usually attack them upwards, whereas a bear will claw down on the person, and the bear will attack downwards. So that's one picture there for you, just for an example purposes guys. In Forex trading, again, when we're going long, we are buying the base currency. For instance, let's just say if it's Euro USD and we are going long on Euro USD, that means we are buying euro because we think the euro is going to be bullish. Whereas in the other scenario is we're going short on euro USD because we think that the euro is going to go down, i.e. bearish, and it's going to get weaker against the US dollar. But then we will have our technical or fundamental reasons for those particular trades to be taken. Now guys, this is really important because we need to understand what we're doing in the forex market, if we're going long, i.e. buying, or short, i.e. selling. So I hope you got the point, guys. The next slide we have is how do you use leverage in forex. Now this is a really important topic, guys. Leverage in forex is where we are using more capital, more buying or selling power as compared to what we have. For example, let's say if you have an account for $1,000 US. Now with leverage we can trade a much bigger position to gain profit and either make a greater loss than what we can do with our own capital. So what happens is with leverage is we are getting the extra position size from the broker to back our position up, and then we are taking a much larger position than we can take with our own capital. So it's really important that we use it carefully, because if you don't use it carefully, guys, leverage can be really dangerous. However, if you're on the right side and you've got the right analysis and you think that you're really confident, the leverage can really help in that way as well, because then you can use that to create a bigger and a better position, hence coming out with better profits. Now guys, the risk of using leverage is again quite high. The reason being for that is some people like to call it a double-edged sword, and that's the prime example, because whilst you can gain higher profits with leverage, there's also a much greater chance of you losing much more capital or much more in forex trading, because you are now dealing with a higher position. So the more leverage you have, the more profit you have, or the more leverage you have, the more loss you have, depending on how your position takes that to be. Now with this, guys, we need to again be very, very careful, because if we over leverage our account, we might end up losing our capital, or we might end up losing our account, for instance, hence by coming out with a much greater loss than we anticipated, which can be quite stressing and emotionally upsetting at the same time. So we need to be very, very careful in forex trading, guys. Whilst it can be really beneficial, it can be really harmful as well. So it's basically the borrowed capital to open position much larger than what we can usually open, and there's loads of different types of leverage. For example, we can get 1 to 100, whereas we have, like, let's just say we put $1 in the position, and the broker will provide us with a leverage of 1 to 100, so we can technically control $100 worth of capital with $1 that we are investing in the forex market, and then that means that you can come out with much greater profits, and you can come out, worst case scenario, you can come out with much bigger losses as well. Now in forex market, guys, first things first is we need to find our edge in the market. In forex trading market, it can be very, very difficult to know what you're doing. It's very, very difficult to understand the forex market, to gain knowledge, to execute your trades, and secondly, and most importantly, we need to find a trading strategy. What I mean by that is, guys, this is our edge in the market. Trading strategy usually consists of a technical based analysis of something that you think that this is technically off, either by candlesticks or chart patterns. You think that you anticipate or you speculate the market to go up and down, and your strategy says that this is what we're supposed to do when the price gets to this point. This is where I'm going to execute the position from. My stop loss is going to be at X price, and my take profit is going to be X price. And then based on that, let's just say we're risking $100 on a trade. So if I put my stop loss here, that's $100 risk, and then take profit would be $200 because we are risking $100 to make $200. And then each strategy has different risk to rewards, different outcomes, different gains, different losses. So it's really important, guys, that you have a forex trading strategy, or you can at least find one, or there's loads of different ways to get access to this information from experts in the markets who have forex courses, for instance, or who will provide their strategies to you at a cost, which is obviously their experience and their time in the forex market. Now, next thing is, guys, we're going to going over is pros of forex trading. There's loads of pros of forex trading, guys. It's really convenient. It's much better in so many ways, and some of those are that forex trading can have really beneficial outcomes in your daily lives. The first things first is liquidity. The forex market is really liquid because it's 6 trillion is traded every day, meaning that there's lots of opportunity to be making money depending on what you're doing and what you're trading. Secondly, it's a 24 hours market, guys, so you don't have to wake up at a certain time, trade at a certain time. You can do this after work, you can do this before work, during your break. So there's lots of opportunities, guys. Whatever time suitable for you, that's when you are happy to trade and you feel like trading and you think that this is your time to trade. So you can do that. Again, there's different sessions. For instance, the Asian session, which is typically, if you're based in the UK, that's going to be typically towards the night. Then we're moving on to the London session, which typically starts around 9 o'clock in the morning. And then in the morning and during the afternoon, we have the New York session, which obviously crosses over the London session. So you have London and New York at the same time. Up until 5 o'clock, the London session closes and the Europe market closes. And then you still have the New York session until later on at night, for instance, until 10 o'clock. So this is really beneficial, guys, because you can find a convenient time for you to trade. The next thing is accessibility. What I mean by that is, guys, it's relatively easy to start. All you need is an internet access and a trading account. So, if you have access to internet, you can trade this from anywhere in the world. You can trade this from the comfort of your home. You can trade this from office. You can also trade it from your mobile phone, depending on what you feel like doing and what you find is the best for you. Another benefit is that we have leverage in the forex market, which means that you're able to control a much larger position than your own capital, so you don't have to worry about putting a higher amount of capital into your forex trading account, because a broker will allow you to control a much larger position, which then means that you can create much bigger gains than you usually would with your own capital. Next thing is, guys, there's trading opportunities. Like I said to you guys, there's loads of benefits in the forex market, and one of the things is that trading opportunities is endless. So there's loads of pairs for you to trade, whichever pair you find is the best for you, whichever time you find is the best for you, whichever strategy you find is the best for you. So it's endless opportunity, guys, depending on what you guys feel like doing, what you're comfortable with, and what works better for you. Now, another thing is diversification. So in forex market, it's a diverse market. So let's just say if one pair isn't working, for instance the Euro USD dollar, now you know that Euro USD dollar isn't for you, but that doesn't mean that you stop trading. You can find another pair that you're more comfortable with, that your strategy works better on. Hence why, for instance, you can go on to GBP USD, the cable, because your strategy is working much better. The risk to rewards on that is much better compared to Euro USD, where the movement might be slightly less, whereas GBP USD will have a bigger movement or better risk to rewards for your strategy. Another thing is, guys, one of the main benefits is technology. As you know, guys, technology has come a long way, and in trading it certainly helps. For instance, there's different tools, there's different charts, there's different there's different analyses for you to make your trading decisions throughout the day. Another big advantage in the forex market is, guys, if you're new to the forex market and you're testing out your forex strategies, or if you're learning, then you don't have to put your own capital in and waste your capital and learn from your mistakes. What you can do is, guys, you can create a demo account. What I mean by demo is this virtual money. It's similar to Monopoly, so it's like it's not really your own money, it's the money that is virtual. So if you make profits or losses on that money whilst you're practicing, you're not really losing out anything other than your time, which is obviously invested into the Forex market. So demo accounts, there's a massive opportunity, a massive advantage for you to be perfect at the Forex market, for you to find your edge in the Forex market, and for you to practice and until you get better. And once you know your mistakes and once you know what works, then you can put in your own capital into a real Forex trading account and benefit from the gains and losses, vice versa. Now guys, these are the advantages in the Forex market. Whilst there's loads of advantages, there's also some disadvantages in the Forex market, which also I'm going to be going through now. So the first disadvantage is it's very risky, so it's high risk. For instance, guys, there's a lot of guys who over leverage or who take positions that are much larger than they take bigger risks than they are willing to lose. So you need to know how much you're willing to lose, what you can afford, what you can't afford, and again, it can be very, very risky if you're continuously wrong, or if you don't have a trading strategy, or if you don't know what you're doing in the Forex market. Secondly, guys, another disadvantage is leverage. Whilst there's leverage can be really beneficial because you can make higher gains, vice versa, you can make higher losses or higher, it can be really disadvantageous because you can lose much bigger amount by using leverage, whereas you can lose much more in that sense as well. So it can be a double-edged sword at the same time. Another disadvantage is complexity. What I mean by that is, guys, Forex has different factors. For instance, technical factors, or for instance, fundamental factors. So let's just say if a negative news comes out for the UK, then we're expecting the pound to go down. And if you're bullish on the pound, then that could really affect your position and then eventually lead to a loss. Another disadvantage is, guys, it can be emotionally stressful to trade the Forex market. Like I said to you guys, a lot of traders every day, they lose money. So you really need to find what works for you, and if you're constantly losing, then it's going to be emotionally stressful for you. So you should be able to know that you should be able to bear stress in the Forex market, otherwise it could be a really dark and stressful journey. Another disadvantage that I personally find this one of the big ones is the lack of transparency. So with what I mean by that is, guys, we need to know who we're going with and what we're doing. So a lot of guys that are new in Forex market, they look for something, but then they find something that isn't really transparent. So they come across a lot of these fake gurus, or they come across a lot of these brokers that aren't really regulated, which then means that they end up spending a lot of money on things that aren't really transparent, and they're selling you the dreams, really. So you need to know that you come across someone genuine, and then that they're 100% transparent with you. And if you're going for a broker, you need to make sure that they're regulated brokers, whereas some brokers, they aren't regulated, and you might end up losing a lot of your capital. Another disadvantage is that like I said to you, this is quite similar to the one that we spoke about earlier. So if your broker isn't regulated, then you have a risk of losing your capital, and there's lack of transparency, meaning that you might not be profitable in the Forex market because of the lack of transparency. Another disadvantage we have is, guys, it's an overnight risk. What I mean by that is, some people, they like things change overnight. Some people like keeping their positions on overnight for higher gains, and vice versa. It could work out to be on the negative side as well, where you lose your capital overnight, or you might risk too much on one trade, meaning that you might lose your capital before you even spend a lot of time in the Forex market, and then you've over risked on the same trade, and you've over risked on one setup because you're too attached to making a loss, and then you end up losing all of your capital, meaning that you don't have any capital to trade for. Another disadvantage is that there's no guaranteed returns in the Forex market, guys. Like I said to you earlier, there's a lot of people in the Forex market and a lot of traders, the retail traders, that anticipate to make a lot of money in a short period of time. But in Forex market, this doesn't happen. You really need to polish your skill. You really need to know what you're doing. And then there's no guaranteed returns. Of course, there's nothing's guaranteed in Forex market. But if you find your edge and if you know what you're doing, and if you have a mentor, if you find a course, or if you join a signal group, for instance, then you will have much higher chances of a return, whereas on your own you might not find the success. So there's no guaranteed returns, guys. Now, given all this, I hope this video was helpful and you've learned a lot. Please like and subscribe my channel. If you have any questions, please comment below in the comment section. I'll be happy to help and reach out. And also, guys, please don't forget to follow us on Instagram, Twitter and Facebook. I'll be leaving the link below. Thank you for your support and thank you for watching my channel. Hopefully I'll be coming back with much more in future. So please stay tuned, guys. Thank you.